Hey, what's going on, everyone? Welcome back to the channel. I'm Ruth Lange, real estate agent with eXp Realty, and today I have Stephanie Wood with Atlanta Mortgage with me today. What's going on?
Hey, Ruth. Thanks for having me. It's great to finally be here. This is such a great space in this studio.
So thanks so much for coming in today. So today I kind of really want to dive in deep to like who you are, what you're about. Can you give us like a little bit of your backstory to begin with?
Yeah, definitely. So born and raised in the suburbs of Detroit, and then came to West Michigan to attend Grand Valley. I went there to be on the track and cross country team and get a degree in education.
Oh,
so
okay.
Change.
Yes, education.
Yes. So that's where a lot of my educating my clients comes from.
Yes.
That background there. But I also came here with my high school sweetheart. We both went to Grand Valley. It was a little bit of a culture shock, I'd say, at first, going from like the suburbs of Detroit, mini malls on every corner, to like cornfields of Allendale.
Cornfields everywhere.
And mind you, this is 20 years ago.
Right.
So
There's really cornfields.
yes, Allendale's come a long way since then. But ultimately, after like 4 years of being in West Michigan, fell in love with Grand Rapids, the area. I mean, undeniably, this is a great place to raise a family. So stuck around after college.
Yeah.
And that's how we landed here.
Very cool. So you said you got started in education. So like, what was your goal for that? Like, where did you want to take that?
Yes. So I was a pretty intense athlete, running 40 to 60 miles a week. And my ultimate dream would have been to be a female athletic director.
Okay.
Because
Yep.
there probably weren't a lot of those, especially back then.
No, probably not.
But after school, so this was early 2000s when the education field was still saturated with a lot of the baby boomers. Mm-hmm. And so I remember being in my capstone class, and a local administrator from one of the school districts around here came in and had mentioned something like hundreds of applicants, and they hired 2 new staff members.
Oh my goodness.
And that was a little intimidating. I also graduated in December, not in the spring.
Oh, okay.
And because you got to do that extra semester for the student teaching. Mm-hmm. And so the only opportunity at that time was really to be a substitute teacher.
Oh, okay.
And when you're 5'2", and 4th graders are also 5'2",
yes. Oh, no.
they don't take you very seriously.
They're so mean too. That's awesome. Yeah, I kind of remember that because my previous career, I used to be a massage therapist, and I worked at a chiropractor's office. Okay. So we saw a lot of teachers, and I remember them all saying, like, especially West Michigan, like the market was so saturated, like it was so hard to find a job to be a teacher in West Michigan. Mm-hmm. And so a lot of them were looking out of state or other areas.
Right. Yeah. I mean, I had a lot of friends or people I graduated with that went to Florida and Arizona. Those were the spots. Right. Now, my husband, well, at that time boyfriend, was here. Yeah. He was still finishing school, so I wasn't really looking to leave the state. Mm-hmm. And so I just thought, you know what, I'm just going to find something that's steady where I know I can go in every day, get a paycheck, get some insurance, until a teaching job comes along.
Right.
And sure enough, I found mortgages.
Oh, boy.
And just never looked back.
Yes, the rest is history.
Yes.
So when you first got into that, were you kind of surprised how much you liked it, enjoyed it?
Yeah, I mean, it really, you take like those tests in school that are supposed to tell you like what you might want to be one day. Right, yep. I don't think any of those ever say like mortgage loan officer.
Probably not.
But it really intertwines a lot of things I enjoy, like on the analytical side, especially, but you still get like that personal touch with people where, when you get to the finish line, you get to give them that news of like, you get to close on your house today.
Right. You're pre-approved.
Yeah.
You get to close, all that good stuff.
Yeah. So I get to do some math. I get to, connect it all together with the guidelines and ultimately get them in their house.
Right. So now,
along with your help, of course.
yes. Teamwork makes the dream work.
Yes.
Absolutely. And then we always say that we work with matters. So for that very reason. So when you actually got started into it, like, how did you kind of explain that like a little bit? Did you like automatically start as a loan officer, or how does that work?
I did not. I started with a training program.
Okay.
And that was 3 months long, which
Okay.
I would say anybody getting into mortgages today would probably enter into a much longer period of being in like an assistant role type position.
Right.
Because the crash in 2008 completely changed the industry from when I had first gotten into it.
Oh, okay.
So
what year did you get into it?
2005.
Oh, wow. Okay.
Yeah.
So you weathered the crash.
yes. Riding all the roller coasters of yes. Yeah. So I would say today, you know, like if I were to give any advice to anybody looking to get into this field, it would be to, you know, take your licensing tests, study for that. If you can, get into a mortgage company while you're studying for the test.
Oh, okay.
Because you do have to be licensed now, which was different.
Right.
You didn't need that before.
Okay. So for the people that don't know the process or don't know the industry at all, like, so when you get it, like you said, you know, while you're taking a test, start working somewhere. So what would they be starting doing?
There's some once they're licensed, they can be a loan officer assistant. Okay.
Yeah.
And to be licensed, that means that you can talk with the client about the actual terms of the loan. If you're not licensed, you can't do that. You can't lock in an interest rate, things like that.
Right.
Okay. So they could start off with something even a little bit lower than that, depending on maybe what their background is, maybe what they went to college for, maybe what their interests are. So my recommendation for anybody today who might be looking to get into the mortgage field is to start at that lower level position where you wouldn't even really need to be licensed yet. So something you could be doing is joining a team where there's a loan officer who might have a loan officer assistant, and they may need help it could be a number of areas. It could be maybe a little bit more on the marketing side, if that's where your interests lie, but maybe you're more like the analytical type. Then you could assist more like under the loan officer assistant in the organizing of files and a lot more of the behind the scenes work.
So what does the training look like to become a loan officer? Like, is it like, because I know like with real estate, it's, you know, 40 hours online, or you can do like a little bit in person. Like, explain that to us.
So technically you just have to pass the exam.
Oh.
And then you could be a loan officer, but if you want to be successful, if you want to know what you're doing, if you want to be able to take a client from start to finish, I would highly recommend, and I'm sure anyone else in my position would too, that you first go through a somewhat lower level position and then to the loan officer assistant position. And then you would eventually be out on your own as a loan officer, because there are many different components, from everything from, you know, growing referral partners to having the marketing side of things. And then for like the actual, like, how do you get a loan closed?
Right.
The most important part.
The most important part.
But
we appreciate it.
you need the business to come in too. So,
right.
So with all of that combined, it really does help to have a time frame where you're working under another individual,
right?
So that you can really learn the business.
Absolutely. Now, when you say like get business, get clients, is that on you to find clients and referral partners, or how does that work?
So it somewhat depends on like your model, your business model, the setup of maybe the branch that you're working in. Are you at a credit union, a bank, you know? So obviously if you're at a bank, you would potentially have clients just walking in.
Right. Yeah. I'll have accountants there anyways.
Yeah. But for me, it's more the relationships that I've grown over time. You know, I've worked with this realtor, and, you know, now through them, I met another realtor. And so just like how we've met,
thanks, Felicia.
Yes. Thank you, Felicia. That is the majority of how I've grown my business personally.
Okay. No, that makes sense. So, saying, you know, talking about like the traditional bank and like where you work, like what is the difference for people that don't know?
So usually working with a loan officer like myself at a mortgage company, right away a client's going to have a little bit more of like that boutique type feeling where there's more of a personal touch, a little bit more one-on-one and not as like broken up.
Like you're a number that you just...
Right. Again, and that all goes back to part of how we get our business. So I don't have people just walking in because they're checking on their, savings account.
Right.
So we usually do have like a more, we usually
personal
do have,
touch.
More of a personal touch, more of a connection with our clients.
Yeah.
And in that way, they tell their friends and family about us too.
Well, and I really had that because, we've worked a lot together, and it's just like the reviews I've gotten from my clients, because it's like, when I'm referring people out, it's like, I still want to know. It's like, hey, let me know how it went. Let me know. And it's like, for you and the clients that we've had have nothing but raving reviews. And it's like, because of that personal touch. And it's like, they've gone to other traditional places or whatever. And it's like, oh, I just feel like a number, or they're not listening to what I have to say. And then so it's like, well, I'm like, let me introduce you to Stephanie. So and then we have a better experience. And
you're right. I mean, I do not work banker's hours. Everyone has my cell phone. Yes. We communicate via text, via call, via Facebook Messenger, email, 5:00 in the evening, Saturday afternoon. I'm there.
Yep.
Yep.
Well, and that's what it is, because like that's really big for us, is because, when we get offers accepted, or, it's like, I have blown up your phone. I'm like, hey, Stephanie, I need a pre-approval right now. Like,
right.
And so it's like, it's nice to have, and you're like, nope, thank you. Like, I got it. Like, here you go. And it's like, oh, thank you. Like, whereas a traditional bank, it's like, they're closed at 5 on Friday, and then you can't talk to them till Monday. And it's like, well, if I'm trying to get a pre-approval or even just a copy of one, I'm like, it's terrible.
Right. Evenings and weekends. I mean, that's when real estate happens, right?
It is when real estate happens.
And that's where, like, I part of the through part of the process, I'm advocating for my client, because you're putting an offer in at 6:00 in the evening, and then I'm calling the listing agent, telling them like all the reasons that they should accept this offer, and all the ways that Atlanta is going to make it great for the listing agent. We're going to make it great for the seller too, by closing on time, giving them regular updates. I'm there to make that call at 7 or 8 o'clock at night, and the listing agent's really going to respect that. And well, higher likelihood of an accepted offer.
Well, and that's exactly what it is, because it's like when the listing agent actually gets to talk to the loan officer, and I've had it with, even if it's like, well, I haven't heard of Atlanta, but it's like, well, as soon as they get a phone call from Stephanie, it's like, well, it's, it's a voice or name with a face or whatever. And so it's like, then it's that personal touch. They feel more confident. And it's like, to your point, that's what gets the deal done. That's what gets the offer accepted. All right. So now that we've talked about like the training and how you get started, so like on a day-to-day, like what do you do? Like what does your job look like for people that might not know?
Yeah, that's a great question. So I am the person who does all of the due diligence to get somebody pre-approved to purchase a house. I issue the pre-approval letter. I do all the behind-the-scenes work to make sure that they qualify.
So in order to get pre-approved, like what are you doing to make that happen?
Yes. Yep. So it generally starts with a conversation between myself and the applicant, or them and their spouse or significant other, whoever is applying. I usually like to carve out a good chunk of time for that, so we can like really dig in, get all their information, make sure that we're meeting their expectations as far as monthly payment or price range, and match that up with their income, their assets, their current debts, and their credit score.
So what paperwork do you usually need initially to get that pre-approval done?
Yeah. So usually on the initial call, we'll make sure that we get their credit pulled up. Once I've gathered all their information and I know what type of income they're receiving, are you just straight salary, hourly? Do you get bonus? Do you get overtime? Do you get commissions? Are you self-employed? Do you own rental properties? Because all those little things can change exactly what we need to do on the back end to, as far as like what I might need from you, as well as how I'm going to calculate how much income,
Right.
Have you been getting overtime for, just 6 months or 2 years? That would change what I could use to qualify you. So that's the income portion. As far as assets, we're usually looking at where is your down payment coming from?
Right.
Do you have one? If not, can we look at a down payment assistance program? If you do have a down payment, let's figure out where that's coming from. Is it coming from the sale of a house you already own? Is it gift funds, or is it money you already have saved in your account? Mm-hmm. And then as far as like credit that they have, where are your scores landing? This will help us back into what type of loan program you might qualify for: conventional, FHA, rural development. If you're a veteran, we're looking at a VA loan. And then again, if you don't have funds for closing, a down payment assistance program like MISHDA.
So how does that work, the down payment assistance?
So that portion of it is there's an extra set of qualifications that they would have to meet in order to obtain that. And that is an additional part kind of at the end of the loan process where we submit the file for the down payment assistance funds, and then it would close right after.
Okay. And you mentioned too, like getting like a gift from like a family member or something like that. Are there certain stipulations for that, or like, how does that work? Like what do you normally need for that?
So the only restrictions when it comes to gift funds is usually if you are purchasing like an investment property.
Oh, okay.
Okay.
Yeah.
But for anybody who's just looking to purchase a primary residence, most of the people out there, they can get on an FHA loan, get a gift funds from almost anyone.
Right.
But on a conventional loan, it does have to be family or a significant other.
Oh, okay.
Okay. So there's a little bit restriction there on who can give the gift.
Okay. And then when they give the gift, like, say like your parents or someone's giving you the gift, do you need like a bank statement or just proof of funds from them?
It's a little bit different on like if it's a FHA loan versus a conventional loan, how deep we have to go with the gift donor.
Right.
But it's pretty simple. Basically verifying that the funds were available.
Yeah, because I've had a couple of parents who were like, "Why do you need this?" And it's like, I swear, like,
yeah,
it's important.
On the FHA side, like we are not making up that we need the gift donor's bank statement. It is a real thing. It has been a real thing for as long as I've been doing this. It will still be a thing, I'm sure.
We're not just trying to be nosy.
Yeah.
Oh my goodness, we love parents, but. Once they have an accepted offer, like what does the process look like after that?
Right. So from that point, it'll be usually up to 30 days until we close their loan. So we reconnect, we go over the terms one last time, get their interest rate locked in. Usually have a small list of maybe some updated documents that we'll need from them. We've already reviewed the bulk of it when we issued the pre-approval. So probably just looking for some updated pay stubs, bank statements, or if anything else has changed, we'll get that in order, homeowner's insurance quote as well. And then we get the file into processing, get it prepared for the underwriter, order the appraisal. So that is when the borrower and I really get to become best friends, because we're in constant communication with updates, if anything else is needed, and all that good stuff, getting their file through from start to finish. So once it gets to the underwriter will review the file and let us know anything else under the sun that could be needed, from a missing signature. Sometimes, many times, the underwriter will often review the file before the appraisal's actually in. So then if there's any last items, we'll get those together, get it back into the underwriter for final approval, and then the clear to close.
Okay. I think that's what I tell my clients or whatever. Like once we get the offer accepted, I'm like, okay, now you need to do whatever they say and get them whatever they need. Because they're like, when are we closing? I'm like, as soon as you get your stuff in and they can get it done. So I'm like, let's keep on top of that.
Right.
So once it gets through, because we talked about like, as soon as, get all your documents, all that stuff. So like, and then it goes through underwriting. And so then so what happens next? Like who gives the clear to close?
So it'll be the underwriter that issues that. Once all documents have been satisfied and reviewed, the clear to close is issued, and then we're usually scheduling the closing approximately 2 business days out from there.
Okay.
And that just allows time for the title company and my closing department to prepare those final closing documents, the final balance out all the numbers. We'll review those one last time, and then they go to the closing table. Hey.
I know I always try to like prep my clients. I'm like, okay, like just so you know, like this date is, I'm like, it's probably gonna be pretty random. I'm like, once we get the clear to close, but I'm like, it's all the numbers. I'm like, that's why it's a specific date. So I'm like, clear your schedule.
Yes.
It's going to be a random day that we have no control over.
I'm sure your boss will let you take 2 hours off of work to close on your house.
Please and thank you. It's usually not a problem. So now getting into this career, because how long have you been in it now?
Since 2005. So like 17, 18 years. Yeah.
Yeah. Very cool. Yeah. So what has been like your big takeaway? Like what's your favorite thing so far?
The pressure is on. You know, throughout my career, all those years, I have done a number of different things. I've started as, in the training program, went to being a loan officer, actually did a year and a half of being a trainer at a mortgage company.
Really?
Yes.
I didn't know that.
Yes.
Okay. Very cool.
Came out, joined a team, and then came back out on my own again. And that's probably, my biggest success is coming back out on my own. And then I go home and, my daughter looks and says, like, oh, so you're a boss now, Mom.
Yes, I am. That's amazing. So like going forward, like, what are your big dreams? Like, like starting a team or something, or like what would the next step look like? Or are you pretty happy where you are? I'm love where I'm at. I mean, there's no better place than Atlanta. So yes, that is true.
Love that. But for my personal growth as a loan officer, I would say, yes, it would be adding a few pieces to my team. I recently brought on a loan officer assistant, Christopher, so people will start to hear from him more. Cool. Yes, so that's been...
I look forward to hearing from him.
Yes, he's great. So that's probably like my first step in that direction, and I'll just continue to grow from there. I have a few other ideas in my back pocket, but probably not ready to put them out there yet.
To be determined.
Yes, exactly.
Very cool. So for first-time home buyers, do you have any tips or tricks or anything that they should be aware of or know?
Definitely, yeah. So
there's always something to know.
Yes. First and foremost, I mean, don't be afraid. It's never too early to start, okay? You get kind of that hesitation sometimes where I understand you're giving someone quite a bit of personal information about yourself. There's definitely reason to be a little nervous about that. But I mean, I consider myself an expert in this field, and by you providing your information to me, we're going to determine one thing or another. Either congratulations, you qualify, and this is what you qualify for, and here's your letter, and get with Ruth and start shopping. Yes. Or we can review and say, here's some suggestions on some things you can do. And, here's a plan on how you can get there.
Right.
Okay.
Well, I think that's one of my things is I've had a lot of people that have come to me that have credit problems, and it's like, that's okay. Like to your point, you need to start somewhere. So I know I've been really grateful to you because it's like just sending someone to you, having that conversation, like, it may not be now, but it's like, if we get together now, and it's like, maybe it could be a year from now, it's like, you don't have to do it on your own. Cause I've had a lot of clients that are like, well, I'm going to do this, this, and this. I'm like, that is great. That's amazing. But I'm like, why don't you get a hold of Stephanie? Cause I'm like, she actually has tips and tricks to improve your credit score, come up with a debt reduction plan or anything like that. So it's like, that'll get the process going quicker because you are the expert.
Right.
So it's like, why do this alone when you have someone like you? And I think to your point too, a lot of people, we even have some now clients are like, oh, I don't know. And I'm like, yeah, I understand. Like, you don't want to give your confidential information out. Like I was the same way. Like I don't give my social security number to like anyone. But it's like, no, it's okay. Like this is what we do. And this is how we can better help you to get you where you want to be.
Mm-hmm. Yeah. I can't help you without your information.
Yes. As much as I would love to, I still need that piece of information. So what are like some of the things that, so what are some tips that you've given people like with credit problems? Like what would be a couple tips to improve your credit?
Yeah. With the credit. So if you have absolutely no credit, then I would recommend that you maybe get on a credit card as an authorized user with your folks. If maybe that's not an option. I mean, obviously only if your folks have good credit. Okay.
Yes, let's start there.
If you're not quite ready to apply for a credit card, maybe through your bank or through Capital One, almost anybody, as long as you have a savings account, you should be able to open up what's called a secured card through your bank or credit union.
I was going to ask you about that. Is that better than a traditional credit card?
It's a good start.
Okay.
It would be the path to then be getting a traditional credit card. Because with no credit score, you might have a tough time getting a traditional credit card. But definitely my recommendation would be baseline, start with that secure card. Once you have it for typically 4 to 6 months, you should be able to generate a score.
Okay.
That's how long it takes.
Right.
And because I've watched people from start to finish. This is when I said, go apply and open that secure card. Call me back in this time frame.
Right.
And then they can generate a score. And I've seen people go from no score to mid 700s.
Wow.
With just a secure card.
Okay. That's amazing.
Going from an absolute no score.
Yeah.
So establishing that credit score is the first biggest thing. And keeping the balance on that card ultra low at all times, not just paying it back down after you rack it up, but always keeping a low balance. So
would you always keep a balance on it though and not pay it off?
You can pay it off all the way.
Okay.
Yeah.
I didn't know if that was better to pay it off or just because I've heard a couple different things. They're like, don't pay it off or just a little bit of
Yeah, sometimes I'd say if we're in a position, sometimes I don't know why the whole credit world is there's still some mystery to it. I'll say.
Oh my word, it's such a mystery.
And sometimes, especially if somebody already has scores established and we're looking to increase their scores, then sometimes my recommendation is to pay the card down to a specific balance.
Okay.
And that would help their score go up a certain amount of points.
Right. Now, along with credit score, what does work history have to look like?
Right. That's a good question too. So with work history, we have to have a work history of at least 2 years. Mm-hmm. Okay. So it doesn't mean you have to have been on your current job for 2 years, right, which I think is what a lot of people hear when that's said. But I mean, most people who are going to be at a position where they're like, okay, I think I want to apply for a home loan, have probably been working for 2 years. So most people do have that.
Right.
And there's even some small workarounds for that. If maybe you were out of the workforce, especially if you were out of the workforce to raise children, but you worked before that, you probably have a 2-year work history.
Okay. Yeah, no, that's good to know. What about, I know for, really young, the up and coming generation, just out of high school. So when you say 2 years work experience, not the same job, does it have to be the same type of career or?
No, generally we just want to see that it's gone in a lateral position. So, okay, I was flipping burgers in high school, then I was a server, and then, college would even be part of it. So if you were a college student and you didn't work, well, I might need copies of your college transcripts for the file.
Okay.
And now, look, now you're an engineer. So, look, here's the transcripts to back that up. That's why you weren't working. You've only been on the job a few months, but you've got this great $80,000 a year salary. Got a 730 credit score because you got your secured card. Why wouldn't we approve you for a loan?
Absolutely. Now, how does it work for, so that's probably a lot of your W-2 people, but how do independent contractors, 1099 people, how does that work?
Yep. And so I've done a lot of loans for those employment histories as well. For that, we really do need to see 2 years of tax returns filed in that industry.
Okay. Yep. Nope. That makes sense.
Just to see a little bit more consistency there.
So you guys work with investors as well, right?
I do.
Do you have, so people looking to get into investing, do you have, things that they need to know?
So for somebody who's new to investing, it's just as important that we get all that information on the front end as well.
Right.
The process is going to be a little bit easier if you already own a home.
Okay.
But the biggest thing, just because the guidelines make it a little bit easier, for us to use the potential rental income on the house that you'd be purchasing as an investment property to offset that payment.
Right.
Okay. And so then the other thing is that if you're buying an investment property, a single family home, you would need at least 20% down, and a multi-unit, so 2 to 4 units, which 4 units is the maximum we can go to on residential financing. Then you would need a 25% down payment.
Okay.
So my advice, and this is what I would do if I could go back 20 years.
Yes, if only.
I probably would have been interested in making my first home purchase be a multi-unit property.
Right.
And had somebody else pay my mortgage for me. And so that would be my recommendation to anybody young who doesn't have, kids yet, who, isn't worried about like maybe what school district they're living in, has a little bit more flexibility, that sort of thing. Just to get yourself started. After you're there for a few years, you can save up a significant amount of money, especially if you're getting all or the majority of your mortgage payment covered by the other unit.
Right.
Then you can move on. You could have a really healthy down payment for, your next primary residence, or you could look to move on to then purchasing another investment property a little bit easier than trying to cover, maybe like your $1,500 a month rent or mortgage payment. Where am I going to come up with 20%?
Right. Absolutely.
To get an investment property.
Going back a little bit, you said that you've been in the industry since 2005. And I know on a lot of people's minds, like 2008, big crash, things are a little, crazy right now too. Can you shed a little bit of light on that? Like what happened then compared to like what's going on now?
Right. So prior to 2008, there was very little regulation in the mortgage industry.
Right.
Okay. So you might hear people make the joke like, like you just, as long as you had a heartbeat, you could get a mortgage.
I've heard that.
Yes. So the word reform comes to mind is basically what happened then. And so, there were other outside factors that somewhat led to that crash other than just the subprime market and reasons why Michigan had it a lot worse.
Right.
Because of the auto industry on top of it. But I definitely don't see this huge crash coming. I think the result of the housing increase over the last few years was kind of like a long time coming. Like Michigan's home prices have been under market for a very long time. That's why we have people from New York, New Jersey, Arizona, California,
especially California,
purchasing homes here left and right. Okay, because they know it's a good investment. We're in West Michigan. Okay, how many people just like me came from Detroit, came here, didn't go home, right? Yep. We have how many colleges in probably like a 60-mile radius that are bringing new people here from other countries, other states, the east side of the state. And then we have families like the DeVosses who are investing in Grand Rapids. They want to see these cities do well that are keeping all these people here. We've got wine country 2 hours north. Yes. Okay.
And we're Beer City, USA.
Yes. So to think that there's going to be like this huge deflation of this bubble. Right. Do I see a slowdown? Yes. I mean, when interest rates double over a 6-month period, that's going to slow the housing market down a little bit, right?
Right.
But everybody has a ton of equity in their home right now. So even if you were in a position where you came into bad fortune, maybe you lost your job, and you had a hard time keeping up with your mortgage payments, I think you would have a huge opportunity to sell your home and take the money, right? Nobody's going to sit on that. Where before, people were in a position where one of the main reasons that a lot of people couldn't keep up with their payments is because there were people that were in ARM loans. So that's where the rate started out fixed for the first 2 years. And then after that, it would increase.
Mm-hmm.
So overnight you'd go from, okay, my mortgage payment is $800. Now it's $1,200. Right.
Are people even really doing ARM loans that much anymore?
No. And that's part of what changed when subprime went away and 2008 happened. And there's a ton of regulation added. Just one, that's when the licensing started, the way that the appraisals are done now, because a lot of what happened then was homes were just appraised for what you said they were. So there's too many positive factors right now, especially here. Now, will we maybe see a little bit of a drop in some other areas, like maybe in Florida or somewhere? But I think West Michigan is holding very steady on values, that I don't see, like, this isn't going to be like, let's go pick up, 20 investment properties at like $30,000 each.
Right. That would be nice. Yeah. Well, and I think to your point is, I think it's kind of shocking for the people that have grown up here in Grand Rapids. They're like, it's getting so busy, or, even it's like, Grand Rapids is growing out, so it's like Rockford's getting busier. Byron Center has always been busy and sought after. But, I remember like Middleville, because I grew up in Shelbyville.
Okay.
Middleville was like a nothing, whatever. And now it's like super popular and sought after. It's like, really? Like Middleville? But it is. It's like, because Grand Rapids is growing so much, to your point, from Chicago, it's so much cheaper to live here. And also, too, it's like the winters aren't as bad. We have the beautiful 4 seasons. And so, like, other people that I work with, they do a lot with relocation, and a lot of them are from California. Mm-hmm. They want those 4 seasons, they want the cheaper everything. And yeah, it's a really beautiful state.
It is, yeah. And to your point, coming from like a Chicago or a Detroit to here, even driving into the city from like a Middleville, that's nothing, with the traffic that you're used to coming from those areas.
Yes. I remember complaining about, like, because I grew up in the country, and I'm just like, like the only thing I had to worry about was tractors, and they're like from Chicago, and they're like looking at me, and I'm like, I'm sorry. Like, yes, I know I'm spoiled. They're like, this is nothing. But I'm like, I know, but I'm like, I drove from nowhere, and there's so much traffic. It took 10 minutes. Like, it's really not that bad. No. Well, thank you so much for coming in today and shedding light on all of this. I'm sure it's helpful to a ton of people. I know even myself, and I always appreciate your phone calls, because whenever I call you and ask you questions, you're always very good at educating me as well.
Well, thanks, Ruth. It was great to be here. It was a pleasure. I hope we get to do this again sometime.
Absolutely. Yeah. Thank you so much for checking out the video today. If you guys liked what you saw, please like and subscribe. And if you have any questions about real estate, please call or text the number below. And if you need anything as far as lending, call Stephanie.
Thank you.
Thank you.